Hey, rich friends, it's your girl Cha reporting live from the Money Mantra, and we are back with another Forex education video. My channel is for those people who want to get rich off of Wi-Fi money, more specifically the foreign exchange market. So if that is you, you are in the right place, and I really hope that you choose to subscribe to this channel. So welcome back to all of my returning subscribers. Welcome to my new subscribers. I hope that I can make Forex trading easy for you to understand so that you too can become an independent and profitable trader. Now, if you do get to the end of this video and you find that it is helpful, make sure that you do give me a thumbs up so that more people can see this video. Leave me a comment to let me know what you learned. But more importantly, share this video with another trader. Don't be a hater. So in today's quick video, I'm going to be going over the concept of supply and demand, but we're specifically going to be focusing on supply. And this should be really quick and simple to explain. So we're just gonna go ahead and look at USD CAD right now. It doesn't really matter which currency pair or asset you're trading. This works well on a bunch of them. So the concept of supply and demand is very similar to the concept of support and resistance. And I'll just do a quick recap with you guys just so that we can understand what's going on here. So I'm going to put a few lines on my chart. Then I'm going to go ahead and break down why I did this, what they mean, and how they um, reflect the supply that's happening in the market. So what you'll notice is that the market will buy at a certain place and then sell at a certain place. It'll buy at a certain place and then it'll sell at a certain place. Then it'll sell at a certain place, and then it'll buy, then it'll sell. And no matter which time frame you're looking at, the market is going to consistently be going through these ebbs and flows of buying and selling. Now, when the market is at a place where you see that it just starts to resist and it's having a hard time going any higher, this is literally called an area of resistance because price is resisting going any higher. So we can see that there. We can see another area of resistance here. The market was already selling, but it would not get higher. We can see another area of resistance here. And it's really that simple. Whenever you see that the market starts to resist, um, this is literally called an area of resistance. Or it's also called an area of supply. And supply is just a place in the market where it tends to sell. Now I'm just going to use my rectangle and I'm just going to highlight this area, and I am going to turn it red just so that we know that we're focused on the cells. Now, if I put this thing in replay mode, um, this is what you'll notice and how you'll be able to recognize a supply zone and when the market is setting up for a sell. So remember, the market is constantly going through these selling, buying, selling, buying. It's going through all these motions. But once you start to see these wicks, right? And wicks are literally just the top of the candles, like a real candle. You'll notice that the market is most likely setting up for a sell. So this entire area that we have highlighted, it is our supply zone. Because what we've noticed is that every time the market tends to tap into the supply zone, it comes right back down. It taps into the supply zone, it comes back down. It taps into the supply zone, it comes back down. It taps into the supply zone, it comes back down. So once you notice that the market really starts to stall or what I just like to call wick out, this is when you want to essentially look for sells in your supply zone. And I like to do this by pretty much setting a sell limit. We're focusing on supply, and I'll put it about halfway in my supply zone. And the best way to capture your supply zone is to have the entire body of the most recent wick, plus the lowest wick that you can find. So this entire area is supply. Now, what should happen if the market is going to continue to do what it usually does is the market will um come back up and touch our entry point, which is this black line. It should not go outside of the supply zone. And our TP will potentially be a little bit lower than the previous low. So I'm just going to press play so that we can see what happens on the very next candle. we can literally see that the market did, in fact, tap into our supply zone again. And then our TP was also hit just by following these very basic parameters. So again, supply is a place in the market where it tends to start to really wick out and then sell. And we can see it again here, right? We see the market was buying, it pushed into the supply zone twice and then sold. We can see the same thing happening here. The market pushed into this supply zone multiple times and then it sold. So that's really all I have for you guys today. In the next video, we are going to be going over demand, which is the opposite, and is how to spot buys using this very simple concept. So I hope that this was helpful. If you are interested in more one-on-one training, make sure that you do register for personal mentorship, and that information is down below in my description box. But until next time, rich friends.